recognize everyone's time. So good afternoon. My name is Ann Retho. Uh, for those of you who don't know me, I work for Byte, and we are honored to host this quarterly New England Data Group webinar event. Before we dive in, just a few quick housekeeping items. The session is being recorded. As we usually do, we will record the presentation parts of the webinar today, and then we'll stop the recording during the Q&A session. We are also attempting to go live today. So again, we'll stop the live before we get to the Q&A session. If you are on live and you have questions, feel free to throw them in the chat and we will get to them. If you have questions throughout the presentations, please feel free to use the Q&A function. Also, the chat is good for conversations. And then broker credits are available for today's webinar, so I'll share the details of those toward the end of the session. So if anyone's looking for that, I will also share contact information and all of that in the chat toward the end of the conversation. So turning to today's discussion, we brought together three speakers this quarter who we think, really have some great insights to offer, and we're excited to have them all here. I think general themes that we're going to cover are things that many of us are experiencing in real time. So trade compliance is no longer sitting quietly at the end of the process. Not sure it ever was, but now more than ever, it is showing up earlier. It's showing up in product design meetings, sourcing conversations, and enforcement actions. So today's session is all about the shift that we're seeing. We're going to talk through data gaps, how tariffs and enforcement are influencing engineering and sourcing decisions, and also the False Claim Act. And as I said, we'll leave time for Q&A at the end, so please submit questions as they come in. And I'll plug this now and again at the end, but if you are attending the ICPA annual conference, we definitely want to connect in person. Again, mention in the chat that you're going to be there, and we'll remind you at the end, who to come look for at the conference, and hopefully we can bring the conversations from today forward to just a few weeks from now. I was just reminded. So with that and with all of the introduction, we will get started, and I'm very pleased to introduce Michael Ford. Michael is the president of Tradebridge Consulting and has extensive experience helping companies uncover and remediate trade data weaknesses before regulators do that for them. So today, Michael is going to walk us through common data gaps that companies don't realize they have until someone comes knocking on their door, and how inconsistencies across customs entries, filings, and internal systems can create compliance exposures. So this is one of those topics where you often don't know there's a problem until there is a problem. So excited to turn the floor over to you, Michael, and learn from you today.
Thank you, Anne, and welcome everyone. Yeah, so let me take a few minutes, talk a bit about data, some of the things that we may already know, and hopefully maybe give you something to think about, right? Because as we all know, data is very, very important, and we spend a lot of our time, making sure we get it right throughout the supply chain, whether we're importing goods or exporting goods, right? Our data that's coming out of enterprise systems, we're passing it off maybe to others for filing, or if we're doing our own self-filing. And so it is critical, right, that we take the time, right, to review that, because when we look at what the government has, it's a picture of who we are, what we've done. There's a history there. And so we all know, if we're working with data in the government system, we're talking about the ACE system. I think we just always want to remember ACE is a master record, right? It's our master data. And how does that match up against what's sitting in our company system? Are they the same, right? And so it's very, very important that there is audits done to perform, right, that data check to make sure that everything matches. And there's many ways to do that not here to talk about audits or the best audit to do, but if you can, right, grab that data up front as quickly as you can, um, once it's filed to the government, and trying to look for any mismatches. Because data tells us a lot about some things inside of our companies, right? We need to learn from that because they're, in an everyday transaction, things that we do routinely, right? That data flows probably very consistent, right? Because these are shipments, these are products that we're handling repetitively. So getting a classification and our valuation, all those things that apply to our products are a lot easier to manage because we're very consistent. It's very repetitive, but it's where are some of the gaps? Where are some things that go wrong? And I'll just share a few with you. I work with companies and I see companies do repairs and warranties, and that sometimes falls outside of the normal shipments. Uh, to me, that's an area to look at. How do we handle our repairs and warranties? Because they do need to be handled different than our normal shipments. And so when I see that, sometimes values overstated, incorrect classifications done. And so it is important, again, that we look at our data. And so that's one of our gaps. One of the other areas where I've seen is, companies over a period of time, someone who are doing importing and exporting may look at to establish, like say, their drawback program. And so there's a little bit of history that we need to go back on. And then all of a sudden we're looking at data that could be several years old. And what we look at inside of our enterprise system, is it the same as what's inside the government has looking at us? And there can be inconsistencies. What we expected in a value, or even just the classification numbers, may have been misfiled, right? And so, is there an opportunity to correct or adjust, or do we have to brush that aside? So, those are a lot of different decisions that need to be made. But just the simple going back in history because we're implementing a new program causes us to look at our data, and that's where a lot of times we find inconsistencies. Of course, and I'm sure we all know this, right? Looking at our data is going to tell us, how much we paid on tariffs. And again, looking back on a history point of view, we can get a better handle on, our tariffs paid over a period of time, where we're at now, and maybe, if there's ever an opportunity to get refunds or whatever, right? We're always going to look at the master data, right? That's in the custom system to make sure that we understand that we have those right values sitting in there. And I'll kind of also end with by saying this, right? And I think this becomes really important that gets spread inside the company. When you look at your data, and if you do find inconsistencies and what is consistent, right, it helps us understand where we may need education inside of our company, right? What learnings? Because in the case of if we have warranties and repairs and we're seeing errors, that triggers we need to do some education, right? We need to do some learning because it seems like we're not doing it right. Right? If we have new people inside of our company, right, have they been brought up to speed with how things have been managed? Did we give them their proper learning so that they get that data right? So it tells us from a compliance point of view how well our learnings inside of our company are going. We all know business changes. Our data is going to change, right? And so keeping up to date with our educational topics, making sure that our staff is truly aligned really, really helps us because it tells us what we did right. And then it tells us what we need to do better at, right? And so looking at our data then forces us to look at how we do our education inside, making sure we have the right topics, making sure those topics are current and up to date. So some things that we need to know about, and the last thing that we always want to make sure, because I think Ann, you mentioned enforcement, and I think Jonathan's probably going to talk some things about that, right? Government agencies are seeing our data, all right? So while we are submitting things into ACE, we also need to understand other government agencies are seeing that data that belong to them. And again, we need to make sure that we're consistent and that we have our hands on it. So, Ann, that's my few minutes of talking a little about data. I'll pass it back to you.
Thank you, Michael. So helpful. And I think, touching on the data and the learning and with the rapid change of everything that's going on now, that cycle of continuous learning is so important. And I know that's why so many people are in this group, is to continue learning, and implementing those kind of learning cycles in companies is such great advice. So thank you so much for all of that information, and the focus on data is special to me. So now we're going to shift a little bit from kind of the more reactive exposure to proactive design. So with that, I am excited to introduce Shannon Hines, CEO and founder of QuickCode AI. Shannon has been at the forefront of thinking about how trade compliance professionals are evolving, and how the function is being pulled earlier into the product life cycle. So Shannon, this has been a big shift in how companies operate, and looking forward to your perspective on it.
Great. Thanks, Anne. I'm going to share my screen.
Great.
Sure you guys can see it all. Yeah?
Yes, we can.
Perfect. Hold on one second. Okay. First, thank you. Good morning. I guess it's afternoon now. As Anne mentioned, I am Shannon Hines. I am the CEO of QuickCode. I'm excited to be with the data group, because when you say data, I know I am with the right people. I'm in the right room, because like Anne, I love data. Today, we're talking about something that sort of used to be, I think if we're honest, not the most glamorous function in business, and that's trade compliance. Not glamorous for a lot of the old way and old reasons that you know, but we're talking specifically about the changed role. Notice I said it's not changing, it's changed. So even if you don't know that it's changed in your organization, it has changed. Something interesting really is happening, and it hasn't just grown, compliance hasn't grown up, it's really leveled up. So if you work with data, or you work with analytics or decision making, you're actually part of that story now, and it's really an exciting time to be in trade compliance. So for a long time, you may know, compliance lived quietly in the background. When things went well, no one noticed, right? You were doing your job and no one noticed when things went well. But when something went wrong, everyone noticed. Am I right? Like, I mean, the money, the fines, the penalties, the exposure to CBP. We have at QuickCode, we have a board advisor who said, once you are on CBP's list, it's very hard to get off. And so the goal here is to stay off the list, right? Now we know, and I'm not telling you guys anything you don't know, the tariff complexity is exploding. Enforcement is intensifying. And the result is that compliance knowledge, the knowledge that you subject matter experts have in your organization, on your products, on your processes, has true strategic value within your organization. So if you haven't realized this yet, wake up, because you absolutely are bringing something to the table that's so valuable to your organization beyond just trade compliance. It's not, as I already said, it's not a checkpoint anymore. I sometimes joke that compliance used to be the team people called after the decision, and now we're really increasingly see that it's people being called, before the decisions are made, and this is really a really, really good sign. But let us talk a little bit about the trade compliance landscape in the new world order. It feels a little bit like the weather, right? If you don't like it, just wait a week. Tariffs shift, policies shift, geopolitical priorities shift, and suddenly that sourcing strategy from last quarter looks a lot riskier this quarter. I if you were importing from Brazil one quarter, you may not have gotten the memo that there was going to be a pretty significant change, for instance, to the Brazil IEPA tariff, the addition. Same for India's. I mean, same for all of the countries that have been targeted. But you have to be paying attention and know that that's a possibility. Companies that react really slowly are discovering that enforcement agencies are serious. They're serious, and these tariffs change literally overnight. And this actually is where data and foresight really become incredibly powerful for you as a trade compliance professional. So let's talk about the old model. For years, compliance data lived in spreadsheets. I will tell you, every single enterprise customer that has come to us, big customers, have come with a spreadsheet. So they get their data from an ERP, perhaps they bring it into a spreadsheet because that was the easiest way for them to keep track of this data. But there are a couple of problems with the spreadsheet, and I think everyone knows that. And I love a spreadsheet. You can sort on them, you can filter them, you can search through them. I mean, if you are a scientific kind of person, you love a spreadsheet, but they are static, right? So the only way that the data in that spreadsheet changes is if you change it. So let's just say you have 50,000 products being imported from India, and overnight some of those products now had a massive tariff assigned to them, right? 25%, IEPA tariff, 25%, reciprocal tariff, and you had to figure out which ones it applied to. So that is a problem if you're keeping track of that information on a spreadsheet to look up for someone down the line. And then I also say the other problem with a spreadsheet is the hero problem. And everybody knows that hero in your compliance organization who is great with data, and they sort of take it upon themselves to manage and maintain that spreadsheet. And they can get information out of that spreadsheet lickety split. They are heroes. But let me help you. If your compliance system depends on a master spreadsheet, you don't have a system. And heroes go on vacation and they change jobs, and then the spreadsheet falls by the wayside. And the truth is, these manual tools that we love really can't keep pace with today's rate of change. And it's not because people aren't smart. You guys are experts at this. It's because the environment is just moving too fast. So you have so much knowledge, you have so much understanding of the way the process is working, but if you're working with these outdated tools, you're spending your time trying to update them, and it really creates a challenge within the organization. But there's good news, right? This is where the transformation gets exciting. And we're talking about real opportunity for trade compliance professionals, because you're no longer just calculating duties. I have customers who came to QuickCode because they said, look, we used to get 1 or 2 calls a week from pricing or sourcing or procurement, and now we get 10 a day, because these guys are trying to figure out, how much is it going to cost me to bring in this good into the organization. You understand the tariff rules, you understand the free trade agreements, you understand the supply chain design. And when compliance can collaborate with these organizations within your enterprise, they make smarter decisions than before the risk appears. And when a salesperson is trying to work a deal, it's critical that they know the tariff that applies specifically to the country that they're sourcing from, and then also what tariffs apply and whether or not the tariff might not apply. And it was a lot easier before. We have a customer who used to say, before last year, the question was China, not China, because the general rate of duty was the same and it applied to, if I brought in a widget, the general rate of duty applied to universally across the board. But now you can't keep all of that in your head. It moves so quickly. So you're really in a place to provide information, even on things like tariff engineering and utilization of free trade agreement and maybe supplier alternatives. And the good news for you as a trade compliance professional is, if you're paying attention, this administration signals their intentions regularly, right? So we often see things in Truth Social before we see an executive order, before we see a federal register, before we see a CSMS. So you're in a position to say, you know what, I read about this, or I know that this is happening. again, it's not a nice to have anymore. Your organization is really going to rely on it, I would say. And technology is the real enabler here. So with this data moving so fast, you can't really keep pace with trying to keep up with wherever you're storing your data, be it a spreadsheet, be it in an ERP. So you need to rely on technology to help you do that, because you're going to you have all these other roles now that you need to all these other expectations that you really need to meet from outside of just your trade compliance information. Um, Integrated platforms, and there are lots of them, automation, global trade management systems are really replacing the manual work with real-time intelligence. And AI is perfectly situated to handle the repetitive tasks, giving support for classification. I know that a lot of platforms, they may not provide classification automatically, but they provide pretty significant support to help subject matter expert do that. Screening, post-entry audit, scenario modeling. I mean, there's tons of ways that these platforms help not replace the people. None of you are getting replaced by these platforms. And I mean that sincerely as a person who sells one of these platforms, but really it's to free you up to help provide guidance to the rest of the organization. This AI handles the noise. It truly handles the noise, but you as the human expert really continue to handle the judgment. And the shift allows compliance to become strategic instead of just an administrative, checkbox in the process. And I'll tell you, we've had so many customers, like I said, come to us and say, we need help doing this faster. So I think the question is, though, what does this mean on the ground? If you're a trade compliance professional sitting in one of these organizations that's trying to move along, you're getting the phone calls from pricing and sourcing and procurement. What does that mean? Well, we know that enforcement is rising. We know that penalties are rising. We know that everyone's expectation from inside the organization of you are rising. But there is a positive side. There is a side that is a good way to look at this, which is compliance teams are getting a seat at the table. Last year, I went to a conference and I sat next to a woman from Baltimore organization, and she said, whereas we used to get a phone call kind of at the end of the process, we now have that seat at the table. We have a seat at the table sometimes during contract negotiations. Every organization is a little bit different, during supplier onboarding, when you're planning market entry. When compliance is embedded early in companies, we can avoid these expensive surprises that happen when the teams that are making the deals don't know about the data that's really critical for them to make the best decisions. We don't want surprises. They're never fun in global trade, for sure. And it really means that this is about mindset. So if you're a trade compliance professional and you're sitting out there and you're wondering, okay, I know we need to be upping our game in our department, because if they haven't started asking you yet, they're going to start asking you, please help us with this information. What do you need to do? Well, you need to upgrade your tools if you haven't already, and that's critical. You need to have a tool that provides real-time information about all things trade compliance. I won't go into them, you know what they are. And then I would say you need to build your relationships with other professionals, in other business units, whether that's the general counsel's office, whether that is a sales organization, whether it's other parts of the supply chain organization. And I would say, to Michael's point earlier, you've got to keep learning. You've got to pay attention to the news cycles. You have to pay attention to the notices that come out from the government, and because this is really your stock and trade. This is what you're trading in. This trade policy volatility isn't going away. It doesn't seem, no matter what the Supreme Court does in the coming days or weeks. We are facing this volatility because something else is going to happen. And the professionals who thrive will really be the ones who combine that regulatory knowledge with data fluency and with cross-functional collaboration. So I'll just leave you with this thought, that your role as a trade compliance professional has really evolved from a paperwork specialist of sorts to really a strategic advisor. And if you don't know that yet, You are. What you have is very valuable. I'd also say go one step further. Really, compliance is a form of business intelligence, right? The decisions that you're making about where you might source something from, the value of bringing something onshore or near shore or reshored, the looking for goods that might have exemptions or redesigning a product so that it doesn't have a pocket where it needs, so we can get a different tariff. Really, really valuable. And that's the value that you're bringing to your organization. Companies that continue to treat paperwork, compliance as paperwork, really will not do as well as the companies who treat compliance as intelligence. And for the people like you who understand data and policy and strategy together, you really are shaping the future of global trade. So that's all I have. Thanks so much for listening. I'm always happy to answer questions. So when it's time, please feel free.
Thank you so much, Shannon. That was fantastic. I really like, one, how you highlighted how strategic it's become, but also kind of that AI helps with the noise, which I think is such a great point to kind of focus in on. So with that, we're going to turn now to enforcement. And pleased to introduce Jonathan Tico, attorney and co-founding partner at Tico and Zaveri. Zaveri, I can never pronounce that after all these
Got it.
years. Perfect. Jonathan's going to walk us through the False Claims Act and key TAM cases. And I think for many companies, this is an area that often feels very abstract until it becomes very real. So kind of the intersection of customs compliance and whistleblower litigation is something that trade professionals at every level, I think, should understand. And Jonathan, we're so excited to have you, and over to you.
All right. Thank you, Anne. Well, let me pick up with sort of where Shannon and Michael left off, because I think there's a another side to this question of data and data analysis. From what I've heard so far, you've been talking mostly about using data and data tools to monitor your own compliance. But I'm just going to start with a question, which is, could you use that data and those same tools to monitor the compliance of your competitors? In a world where there are very high tariffs with a complex system, and a lot of enforcement activity, I wrote down from Shannon's first slide, tariff complexity and enforcement intensity. Yes, absolutely. But in that world, from my perspective, and you'll see that I have a somewhat biased sample, but from my perspective, those high tariffs and complexity have one very negative consequence, which is that they tend to act as a sieve that operates to the advantage of companies that are willing to cheat and to the disadvantage of companies that are compliant. And so it's great to bring your own company into compliance, but if the competitor down the road is cheating and not paying that 25% tariff that you're actually going to be at a competitive disadvantage. So let me just start with that thought. And now I'm going to tell you about the False Claims Act, which has both a defensive and an offensive side to it. As Anne said, you don't want to find yourself on the receiving end of a False Claims Act lawsuit. And as compliance professionals, you might be worried about that. But it also has an offensive component because it is a tool that can be used to level that playing field in favor of compliant companies. All right, so let me go to my slideshow, which I'm going to move through really, really quickly. Make sure I'm sharing the right thing with you. I'm going to move through this really, really quickly. I'm happy to send this slideshow. All right, are you seeing it now?
Yep, we got it.
Okay, great. I'm happy to share this with anybody who wants it, and because I'm going to move through it very, very quickly. So I'm going to start by just explaining a little bit of how the False Claims Act works and how it applies to the customs world. Talk about type.
Sorry to interrupt. I just lost it. I'm not sure if Shannon and Michael, if you guys are able to see it. No. Yeah, we're just seeing like your beautiful
sharing.
street.
Mountain.
Beautiful, yeah, beautiful mountain background.
Okay, it's sharing the wrong thing then. Let's see.
It was for a minute. It did show
Let me
up.
get back to it. Share. Oh, yeah, that's just my screensaver. That's not going to help you.
It's very beautiful, though.
I was going to say,
Okay, how
although
about
it's lovely, so.
okay, how about now?
Yes, now we can see, yeah, your PowerPoint.
Okay, all right, all
Um,
right. Now I just got to get to the right one. Sorry for the. Okay, here we go. You see it now?
there we go. Yes.
All right. All right. So we're going to talk about how it works. We're going to talk about how it applies to customs. I'm going to talk about some of the signs that the activity in the False Claims Act world are increasing really quickly, and some new fraud schemes that this is just kind of my prediction that we're going to start to see come out of these cases in the coming years. So the False Claims Act is basically the main statute that makes it illegal to commit financial fraud on the federal government. And most of that statute is about submitting false claims. It's requests for payment from the government. So the big areas of the False Claims Act litigation traditionally have been government contractors who are cheating on their contracts, or healthcare providers who are cheating the Medicare and Medicaid system. Those have been the two big buckets. But over the last few years, customs has started to become a large third bucket. And that's because the False Claims Act has what's known as a reverse false claims provision, which means that if you are cheating in order to avoid paying money to the government, that is covered as well, and that covers customs fraud. It is a statute that has an intent element. The fraud, or I really shouldn't use the word fraud. I'll just use the word evasion. The evasion does have to be knowing for it to be covered by the False Claims Act. So it doesn't cover every mistake that is made, say, in an entry summary. But the intent element is pretty broad under the statute. It's not just sort of the kind of specific intent that applies in criminal cases. It also includes deliberate ignorance or reckless disregard. These are things like you should have known better. All right. So if you're a large company and you are misclassifying your goods or claiming an incorrect country of origin, even if you kind of think you're right, if it turns out you're wrong, you may still have liability under the False Claims Act. And that liability primarily arises out of the entry summaries. And I'm sure pretty much everybody who's on this webinar has seen this before, although I think this version is now outdated. This might be last year's version. But I've kind of highlighted the fields in the entry summary that almost always give rise to False Claims Act liability. It's going to be country of origin. It's going to be the description of the merchandise, the classification under the HTS, or claims for exemptions, and it's going to be value. All right, the declared value. Those are the three ways you can cheat. You can cheat by lying about any one of those three things. And False Claims Act cases have been brought relating to cheating under all three of those. There is also country of origin marking, which often is sort of a secondary claim in cases that involve country of origin misdeclaring, right? So you can declare the country of origin on your entry summary. If you get that wrong, you may have liability for unpaid duties. But if you're marking your products with the wrong country of origin, that also gives rise to liability under the False Claims Act. That's an automatic extra 10% duty known as a marking duty. So what is unique about the False Claims Act? The main thing that is unique about it is that it gives permission for what are known as qui tam actions. And that's just short for this long Latin phrase that I've got up there. And what it means is that a private citizen or a private company can actually initiate a case on behalf of the government, claiming that somebody else has committed customs evasion. This is actually the main source of the Department of Justice's False Claims Act cases. They are almost always started as qui tam cases that are started by a private citizen or a private company. And that's what I do. I represent those individuals and companies. They're called relators under the statute. And they can be either natural persons or companies. And in the trade world in particular, we're seeing an increased number of cases that are being brought by companies as opposed to individuals. That is, I think, because companies are starting to recognize that it is a tool that can be used to level the playing field against competitors who they believe are gaming the system. It's a very strong statute in terms of remedies. When the government wins one of these cases, they get treble damages plus a per claim penalty. So I've just given an example there. Let's say a company has evaded $2 million in duties across 100 shipments. That could lead, under the math of the False Claims Act, to a judgment of at least close to $9 million. So $2 million in customs evasion, a potential $9 million judgment against that company. That's on top of attorney's fees. So you can see how False Claims Act litigation can be quite expensive and why it's very dangerous to be on the receiving end of one of these cases. The relators, the parties who bring the case, the folks I represent, they have a financial incentive under the statute, which is they get a reward paid by the government that is a percentage of the money that is recovered by the government. And that percentage can be anywhere from 15 to 30% based on a bunch of different factors. But you could see if there's a $9 million judgment in favor of the government and you were the one that initiated that case and you got, say, a 20% reward, well, 20% of 9 million, that's $1.8 million. That goes to the relator. So there's a pretty strong financial incentive, which is designed to incentivize people and companies to come forward and provide this information to the Department of Justice so they can crack down on these frauds. All right, here's just some statistics. Since 2011, which is as far back as I've been able to go, there have been $333.7 million recovered in what are called intervened customs qui tam cases, which is most of them. So that's how much the government has recovered as a result of those cases. And the government has paid out over $56 million to the relators. Most of that, more than half of that, comes as no surprise, has been in the last 5 years or so as the tariff rates have increased and the size and number of these cases has increased. And in 2025 in particular, we saw a major uptick in activity. The Department of Justice and Homeland Security. That should be DHS, not HHS. HHS is healthcare fraud. DHS is you guys. So DOJ and DHS created the Trade Fraud Task Force that is really looking to bring these cases, which are civil cases, but they're also looking for criminal cases, which I think is something relatively new in the trade space. Historically, DOJ has not prosecuted a lot of people for customs fraud, but they are going to start doing that. And those investigations are already ongoing. I know that from personal experience. I've had clients who have brought civil qui tam cases and then subsequently been interviewed by folks on the criminal side of DOJ who are considering, bringing criminal cases for the most blatant types of customs fraud. According to what some DOJ officials have announced at various conferences, they saw about a 50% increase in new customs qui tam cases being filed in 2025 over prior years. And 2025 also saw the single largest customs qui tam case ever. That was a $54.5 million settlement that resulted in a reward to the individual who brought that case of about $9.7 million. I know all about that case because he was my client. So let me say just a couple of things about types of frauds that have not yet started to really show up in these cases, but that I think are coming. You have to remember the cases that become public and are announced were started years ago. It takes the Department of Justice 2, 3, sometimes 4 years to get to the end of the case. That Saratisit case that they settled in December of 2025 was started in late 2022. It took about 3 years. So folks like me who are sort of at the beginning of these cases, we see things that aren't going to become public maybe for 2 or 3 years down the road. And I just wanted to point out two things. So the first thing is almost every case I'm seeing now involves delivered duty paid DDP transactions, which is something that I'd never really seen much of until this year. And it leads me to think, both based on what I've seen and things that I've read that other people have written about, that these delivered duty paid transactions are often, not always, but are often intended as a shield to protect the US buyers from customs evasion. But there is a serious question as to whether or not that really works. There will be cases, I guarantee you, down the road where a US customer has purchased products overseas on a DDP basis, had no direct involvement in the entry process, but the Department of Justice will go after them for the customs duties because they knew, or they should have known, that there was fraud going on, and they would have known that either because they were told that directly by the company they're doing business with overseas, or because the pricing is just so unrealistically low for the products that there's no way that the importer isn't cheating. The other thing that I'm just now starting to see a little bit of, and that I think is going to become a huge source of fraud going down the road if the tariffs are structured the way they are now, which has to do with these Section 232 metal tariffs, where the tariffable part of a product is going to be based on how much of the content of that product is made out of one of those metals. And the guidance that CBP is given under these for how to calculate these duties suggests that the way to do it is for the importing entity to get an invoice from the overseas supplier, breaking down the cost of the product into the tariffable, say, aluminum content and the non-tariffable content. Well, okay, but it seems to me that that is just begging for people to commit fraud. Because now, what are companies going to do in order to gain a competitive advantage? They're going to say, well, okay, well, my invoice only shows a 10% aluminum content. The competitor down the road, his invoice shows a 20% aluminum content. Which one would you rather have? And so there's going to be a lot of cheating under these tariffs. As tariffs get higher and as they get more complex and harder to audit, the amount of cheating goes up. That's just like a rule of nature. It's like the speed of light. It's like the second law of thermodynamics. If you make a high tariff and you make that tariff complex, there will be more and more cheating. So I'm going to just stop there, and I am happy to answer any questions. And like I said, I am happy to share my slideshow with anybody who wants to see it. Just shoot me an email or give me a call, and I'll gladly send it to you.